very good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of automated trading, we will be continuing to work with the EMA crossover. This is the third part of this series in which we are using the EMA exponential moving average, in which the more weightage is provided to the recent average price of the underlying instrument, and along with this, we will be also using the ATR to define the to range for the day depending on the recent price action for last 14 days, and we will be utilizing to optimize our entry and exit points. Before we get started, this is the standard disclaimer. I would like to remind that this is simply a tutorial session and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. And even if you want to use any of the algorithms developed here, you should do extensive trial runs and also sufficient amount of mock runs on demo accounts so that you get a better idea of how effective or how efficient the algorithm is, and also the risk and reward factors. And of course, nothing in the webinar is to be constructed as an advice to trade or for an particular setup. So let's get started. I would like to give you a brief idea of the underlying theme of our algorithm. So this is the ATR, and as you can see, because of the high volatility which we have seen in recent past, the ATR is kind of elevated compared to the prior days, and these days the euro's ATR is almost 90 pips. That means in a day's time the euro is moving almost close to 90 pips. But I would just say that this varies from time to time, and we are using to optimize the entry so that even during the times of higher volatility we are aware of what happening in the market and the algorithm should trade accordingly. So that's the reason behind going with the ATR rather than going for a fixed price range. Let's change it to hourly. The setup, as I have elaborated in the earlier sessions as well, is simple. We are going to look for a sell trade in the first 10 hours of the EMA crossover, and we are going to look for a buy trade in the first 10 hours of a bullish crossover. And I think we had developed the setup for buy side to some extent. Of course, we are going to add some additional block. So the idea has been that we see that during the first 10 hours the candles 2 periods back should have closed in green, and its recent high should have been above the EMA 10, and then the next candle should close in red. That will mean that the confluence of 10 and 20 EMA is offering resistance and the selling pressure is coming back. And also for this candle, the recent its candle high should be above the candle 10. So that has been the idea. But instead of opting for a market open, we will be putting the prices 10% of the ATR inside this candle close. So if the now for example here the candle has closed at around 1.136, so we will be taking the 10% of the ATR, whatever the ATR range is on that particular day, and we will add to the closing price, and the order will be placed closer to this EMA because of this pending order condition. And to of course to make sure that no undue losses are there in case suppose what happens sometimes that the order will get executed and then the price will continue to move upward and our stop loss will also get triggered. But since our order validity will be for 1 hour, and it will be 1 hour till next candle close, so the algorithm will execute further trades when the candle even the current candle has moved inside, that is above the EM10. To avoid such circumstances, we will also use the last tick price, and we will put in condition that the last tick price should be below the EMA 10 for any sell trade and above EMA 10 for any buy trade. So let's see what we have done so far in the algorithm section on the Visual J Forex platform. So far we have done this instrument subscription, the Euro USD, then position amount has been placed at 0. We brought in the EMAs. These are first current EMAs 10 and 20 time frame. These are 10 periods back, 10 hours back, EMA 10 and EMA 20. Then EMA 10 and 20 on 4 hours for a idea of for an idea of major trend. We are also going for a confirmation on the major trend of 4 hours, and then we are going to make sure that the near term, the short term trend on the 1 hour is also in the same trajectory. This is the candle setup. Here the shift is 1 and here the shift is 2, as I explained to you on the chart, that we are going to look for the prior candle and also the candle 1 period back. So we will be using the candle closing and the candle high and candle low to determine the entry point. These are calculations. We want our candle close to be within the 15 pips of the EMA 10. So I think it is 15 pips. We have defined the ED1 as 15. Let me check. Yes, it is defined at 15. So the candle close will need to be within the 15 pips of the EMA 10. Then this is the ATR value. The shift is 1. So that the ATR of yesterday will be used. And this is the calculation for determining the 10% of the ATR. And here we are going to calculate the difference between the EMA 10 and the candle closing, and this is for the sell side SD, and we will check if the difference is within 15 pips, and these are for the pending open. This is for the buy entry and this is for the sell entry. We will be subtracting 10% of the ATR from the last week price whenever we will be going for a buy trade, and we will be adding the 10% of the ATR whenever we will be going for a sell trade. So that has been the condition. This is the order validity time. We can keep the order valid for 1 hour or 2 hours. I guess we can try for maybe 1 or 2 hours. Let me see. Yesterday we had kept it at 1 hour, but if we wish we can change it to even 2 hours or 1.5 hours. So today we will try testing it with 2 hours. Let's see how it goes. And then this is the setup so far. EMA 10 should be above EMA 20 for 1 hour, and same crossover should be in the bearish territory 10 hours back. So this is inverse here, and this is for the 4 hours. The candle 10 should be the EMA 10 should be above EMA 20 for 4 hours, and then these are to check whether the this candle 20 I think is shift 2, means 2 hours back. So it will make sure that candle close is below the candle open. That means that candle would have closed in red, and the next candle close is above the candle open, means it has closed in green. So initially there was correction, and then the EMA confluence provided some support and the buying momentum came back and pushed the prices higher, and this is the difference. The execution difference should be below the 15 pips as we have defined it. Now let's bring in the last tick value. We want the last tick value to be above the EMA 10, so we bring in the last tick bid. This is just to make sure that in times of higher volatility, when the price keeps going down and down, we shouldn't be suffering too much of a loss, and algorithm should stop placing more buy orders. So simply that's the reason why I have gone for this condition. So we take this and we compare the value to the current EMA 10, and now we will need more if blocks. Last tick bid should be above the EMA 10. So we have done these conditions, and now what needs to be added will be looked into. So let's see what further optimization we will need for our algorithm to become good enough. Let's go back on chart. So here we will be placing the pending open, and now let's see this. We will take this as our example, and we have made sure that during the no let's compare it on the buy side, so we will have a better idea. While developing the sell side, we will take a reference of the sell side chart. So we want the low of the candle, both the candles, 1 period back and 2 periods back, we want both the lows to be below the EMA 10. So we will those conditions, we will put in those conditions. And we have these two candles, candle 19 and candle 20. Candle 19 is 1 shift 1, and candle 20 is shift 2, and similar conditions are needed for both the candles. Auto created the candle 19 and the candle 20, and the candle low for the candle 19 should be, and let me also bring in the candle 20 is low. Candle 20 is low and candle 19 is low. EMA 13. So we want both these candle lows to be above, sorry, not above, below the EMA 10. We take these conditions, and we want candle low to be less than the EMA 10, and similar will be requirement for the the other candle as well. Let's put it here, and let's see what further conditions we will need now. So this is the setup. We have defined the last tick value, we have defined the entry point as well. We will be using the pending open. I think we are almost good to go to bring in the pending open now. Just let me check if there is any condition which is missing. Even if you feel any condition is missing, you can write it in the comment section, and I would be pretty happy to get the feedback, and we can together continue to work. So far so good. I think most of the conditions are there on the if side, on the buy side, using the if blocks. Okay. Yes. Let's go. Let's bring in the pending open then. The order will be limit order, buy limit, and the price for the buy limit is going to be as we have defined it. We wanted the candle low to be less than EMA 10, so we put it here and we go back again. And our calculations are here. We are going to use this buy price when the last tick price is adjusted by subtracting the 10% of the ATR, this AC, and we bring in the buy entry for our order value, and we change, we let it remain here. We will change this default amount for 0.1 million. Slippage, I guess 2 pips slippage is more than good enough for the Euro USD. Default stop loss can be kept at around 15 pips, and the take profit will be for 25 pips. And as I said, order validity time we will make it as OVT, order validity time. We save this and we put it here. And now this calculation, which has been defined for 2 hours, will help us determine the order validity. So let's go back again. So this is our buy side. This buy side has been completed today, and just I want to make sure that we are putting in all the requirements. So the EMA 10 hours condition is there, or both on 1 hour time frame and 4 hour time frame, the candle close conditions, and the minimum requirement, that is there shouldn't be too much of an volatility, the last tick bid condition, the candle loose, and then the pending open. Now let's shift our attention for building the sell side. Again we will need many blocks, 9 to be precise, as we are going to build a symmetrical sell side, and on the buy side we needed 9 if blocks. That means even on the sell side requirement will be the same. For the time being, let's bring in 6 if blocks, and then we will use more as required. First, we define the EMA requirements. And then the rest of conditions. EMA 13, that is the hourly 10 EMA, should be below the EMA 20 of 1 hour current EMA. So we bring in the if condition, and it has to be less than the second condition. Okay, then we make sure that the crossover is new, so we go back 10 hours in time, and 10 hours back in time the EMA 10 should have been above the EMA 20. So we bring this EMA here and we compare it to the EMA 20, and we want to make sure that EMA 10 was running above EMA 20. That will mean that this turn in the bearish sentiment is new, and we want to make sure that even on the larger time frames of 4 hours the shift should be there. That will mean that EMA 10 of 4 hours should be below the EMA 20 of 4 hours on the current time frame. The candle time period is 10, here 20, EMA 17 should be below EMA 18. So we have defined the EMA requirements for our algorithm. Now let's go back in time. Let's go down on the sell side. So this is our requirement, and I think this is now we check for other conditions. The EMA 10 should be less than the EMA 20. Okay, again we go back to add further conditions, and now we will want to make sure that the candle close is in the desired pattern. That is, the candle 2 hours back should have closed in green, and then candle 1 hour back, that is last candle, should have closed in red. So we compare the candle 19th open and close prices. So this is where it is, and we bring the candle open and the candle close for the 20 candle open and candle close. Okay, and we had to make sure that 2 minutes back the candle had closed in green. We want to make sure that candle open was less than the candle close, which means there was price gain. The candle close was higher, and then we check for last candle, and this candle should have closed in red. That will mean candle open was greater than the candle close. So we make sure that condition is also fulfilled. We required candle open to be greater than the candle close. Okay. Now we want the last tick price. Of course, we also want to make sure that the candle 19's close is within the 15 pips of the EMA. So we again take this, the candle close. I think no, this is not the right way. We have already done the calculation. I think I forgot. So we go here, and here's the sale difference, where we have deducted the candle closing price from the 10 EMA, and the difference, whatever the difference is, it should be less than the 15 pips. So we bring these conditions as D here, and we have defined the 15 pips value in this condition MDA. So yes, ED1 is at 15 pips, and this is default instrument pip size, that will mean 15 pips for the Euro USD. Now we need to bring in further if conditions. We will need 3 more, as I remember correctly from what we did during the buy side setup. Okay, so the sell difference should be less than the 15 pips. Okay, and now we check for the candle high. Both the candles high should be above the EMA 10, so we make sure that is the case. Candle high for 19 and candle high for the 20, and this candle high should be above the EMA 10, the current EMA. And on top of that, we also need the last tick price to be below the EMA 10. So here the requirement is candle high should be greater than the EMA 10, and the candle 20's high also needs to be greater than the EMA 10. The last tick value, when the order is going to be placed, that needs to be less than the EMA 10. Last tick value, and here we take the tick off, which needs to be less than the EMA 10. So I think we have completed the sell side setup as well. Most of the conditions have been fulfilled. So let's go again on the downside to take stock of the situation. We also need to bring in the remaining 2 blocks which are still here. EMA 10 and EMA 20. So we are almost done with these conditions so far, and now is the time for our algorithm to be fitted with the cell limit block that is pending order for the cell side. Yes, let's bring in the pending open, which we have to set for the cell side. Here it will be a limit order cell limit, as the price is going to be above the current value, and here we needed the last tick ask to be less than the EMA 10. We have put in that condition. And now we take the cell value, the last tick bid increased by the 10% of the ATR, the SE. The instrument will remain the same. Amount will be set at 0.1 million. Slippage 2 pips, just similar to the buy side. Stop loss at 15 pips. And the take profit will be 25 pips. So this is the order validity time to us. So I'm pretty much confident that we are not missing on any further requirement, and this is all the setup we need for this particular algorithm to be working nicely. Let's see how it will work on the historical tester. So let's save the file March 10, as we began working on these on the 10th of March. So we have saved it as March 10th. Okay, let's export the file now, and we will do test run for some short duration and see. Oh, I think we have missed out on something. I don't think. Yes, it is well connected. Wow, what's the problem? March 10th, save. Export Java. And here we save it as March 10th, and we will need to take the same file, exactly the same file. Let's reduce the zoom to 100%, and then we search for the same file March 10th in the folder. And here is our file. We will need to compile it. Okay, let's check the code length. Here is our code in Java, and it is pretty expensive, not that large, but still. And we compile it first to see that we haven't made any errors while constructing the algorithm. So the compilation is successful, which means we can carry out the test run, as the file has become machine readable now. We tested for a few days, maybe last week. Let's see how it goes. We will put the test run for last week, prior week, and the instrument is Euro USD. Okay, no issues. And if the test run is running too slow, we will simply stop it for maybe a day, after a day. So we put the take profit at 25, the instrument is all right, and the default trade amount should be 0.1 million. The stop loss is of 15 pips and the default time period is 10 minutes. Okay. This is our algorithm at work. No trade was executed on the Monday last week. It will be interesting to see how it unfolds. But now we are not going to get a idea of the efficiency of the algorithm. We just wanted to make sure that the trading requirements are being fulfilled by our algorithm. So suppose if any of the trade gets executed, we will have something to go back and check on the chart. But now no trade is happening for 2 days. But anyways, this is all that is there for today's setup, and if we need to further optimize it, we will take a look tomorrow again, or if I feel that we can work with a new setup, then we will go for the new setup tomorrow. So for the day, this is it, and let's stop the test run. Suppose if you have liked this idea, the trade setup, you can try to implement this on your own also. And at that point in time, I would suggest that you do extensive trial runs. Here we have stopped the trial run after 2 days only, that we are short on time, but you will have a lot more time and you will be in a position to do the test run for many months together. So thank you all for joining in. Have an excellent day ahead. See you tomorrow. Goodbye.